Hey, what's up trader, it's Kati from the Start Trade. In this video, what I want to do is I want to show you a way to benefit from big trend that you missed. So you often see big news or big events that produce a big trend in the market, right? So there's a way to benefit from those, even if you miss them. There's a way to re-enter the market. This is what I want to show you in this video. Now, I think one of the mistakes people make often is they try to chase a move. So if they see a big move, they're going to enter straight away. They're going to get in the market as soon as they can. But the smart trader would do things differently. He would basically be looking for what's happening, then trying to find an entry point that fits with the trend, so not entering right away, and then he would enter once that specific setup happens. So I'm going to show you exactly how that works on the video. If you have any question in the end, let me know, and I'll see you soon. So last week on Friday, we had this news release, the NFP. This happens every single month on the first Friday of the month, and it's basically the most impactful news release that there's ever in the Forex market. It's where a lot of traders react strongly, usually. So last week there was a big difference between the expected number and the actual number that came out. Jobs created in the US were much lower than expected. So I'm on the USD CAD right now. I want to show you what happened. Right on Friday last week, we had this big candlestick. Now this is not that big as on other pairs, but it's still pretty significant, right, compared to the other candlestick before. So I'm gonna go to the 4-hour chart. This is the candle that was formed by the NFP announcement, right? Candles. The NFP was at 8:30 in the morning. This is the candle that contains the NFP announcement, we could say. So this is the big move. Now most people don't want to enter the market on that candle. That's pretty big. Like if you want to enter here, you really have to be quick, or you have to enter before, which is not always the best idea. Now, most new traders, what they're going to do is they're going to enter the market as soon as possible. So they would be watching the NFP. They would go on the lower time frames, like the 5-minute chart, and they may enter like here, right? Something like that. But then they see the market reverse right after the news announcement. Okay, so the market reversed straight away. This is not the optimal way to enter. Most people want to enter as soon as they can, but this is not the optimal way to enter. You want to make sure that you enter when you have a good reward to risk, right? Because if you enter here, you kind of have to put your stop loss above. Otherwise, you risk being stopped out too often. So most people would do that, but don't do it, basically. Now, the way I'm going to show you this is I often trade on a higher time frame. So I'm not caring that much about the lower time frame, because it could have reversed in the opposite direction right after the announcement. So we don't know. We don't know what's going to happen after. We may have a big initial reaction, but then price may go back in the opposite direction straight away. So when you think about the higher time frame, you really care about having a small retracement or pullback in the opposite direction, and then you can enter. This is exactly what happened on that pair. So right after this candle, I'm back on the 4-hour chart now, but we had this. I'm just going to try to show it like that. We had this kind of small consolidation, right? And the cool thing is that this is higher time frame. So if you're going to trade, if you're going to take your time and do something else on Friday, that's fine, because you can go back. This is like this week, the week after. So you can go back the week after, see what happened, and then you're going to trade. Then you're going to enter logically on a trade. So we see this consolidation, right? After the event. What we might want to do, since we had a big trend, so a big move in that direction, we might want to keep going in that direction, because it's just more likely to keep going. I rarely enter trades that are counter trend. I prefer to enter when it's with the trend. To me, it's just a lot more reliable. So we had this consolidation. Basically, consolidation never lasts forever, right? They only last for a certain number of days or hours, and then a trend has to start. That's just how the market works. It's always like that. So what you can do is you can look at that consolidation, and then you can look to trade a breakout. See, so we went from a big, like, kind of reaction trade that you chase the market to simply a breakout. A breakout is simple. You have to, of course, confirm them if you want to enter, but the basic thing is you're going to enter on a breakout. So what you can usually do is you enter, I guess it's up to you, but you can either enter when you break the low of the range. So that would be around here. Oops, that would be around here. Break the low, you enter. Or you could enter at the close of the candle, like the first candle closing below the low, which would be like around here. Okay, so two ways to enter. You would put your stop loss here inside the range or even above. It's up to you. But that would be quite a big stop loss. But you could put your stop loss simply here as I drew it. That's the easiest way. And then you just have to ride the trend. That's the only thing. Of course, you may see other consolidation along the way. This is totally normal because the market tends to do this consolidation often. Whenever you have a big move, like it's never gonna go down straight, like straight big move down. You're always gonna have consolidation along the way. So whenever you have a big move on a daily chart, like price doesn't go like straight down. You always have these small move up, small retracement, then a move down. So this is the logic we're using here. Really looking for either a retracement on the lower time frames, like the 4-hour chart, or you can be looking for a breakout. So those are two things I like to do. I like to do them because it's with the trend, so you don't have to worry about being counter trend. It's usually reliable. The only thing you have to do is you have to confirm them. It's up to you to decide how much confirmation you want to have, whether you want to use an indicator to confirm the breakout, or whether you just want to trade the plain breakout with no indicator. That's totally fine. You're with the trend, so it gives you an advantage. And you're also looking for a logical moment to place your stop loss. Entering anywhere on the move here would make it harder to place your stop loss. You would have a huge stop loss. But entering here at the breakout with the stop loss within the range, this was on a 1-hour chart, this gives you a much better way to enter the market, right? So you have this small stop loss, and then you can trade the stop loss along the way. So I hope this is valuable for you guys. If so, check out the YouTube channel, subscribe on YouTube. This is Art to Trade. You can just search it, or if you're seeing this on YouTube, I love it, I appreciate it. If you like the video, subscribe. I would love to get you more videos in the future, help you out in your trading. Let me know how I can help, because I really want to do videos that people like. I want to do something that people need. That's the goal. So if you liked it, like the video, subscribe if you're not a subscriber yet. And check out thisarttotrade.com. There's a few resources there you can use. There's a couple of things that I know will be useful to you. It's most of it for free. And you can check this out definitely today. So look at that. Let me know if I can help. Leave a comment below if you liked it. And I'll see you in the next video. Ciao.